Hey, all the masters and the chart addicted people like me. How are you all? I hope that everyone is cool and quick mic testing. If you can hear me, if everything is cool, just let me know. Or if there is any sound problem, also let me know that. I hope that everyone is cool and everything is cool as well. Just let me know if you can hear me perfectly and rest of the things are good. I can hear all good. Thank you, Gupta. Thank you, Boutique. How are you all? I mean, just let me know how are you because it's more important than trading about the health, about the mental condition. Hey Patel, thank you so much for letting me know that. Good. Welcome, brother. You are most, sorry, thank you, Erdogan. I hope that you guys are cool. Yesterday I have tweeted that another master class is coming because today is holiday, no trading opportunity for today. So I would love to talk about here a little bit. What's that? Yeah, there. Let me go to the daily chart. In the specific day when I actually talk about all of these things, breaker block, last daily fair value gap, over there, I told one thing very specifically, and that is if market doesn't close above the constant crossment or above that high was my buy side liquidity. I told that if market doesn't close above that high, there can be a bouncing between this last fair value gap and this breaker block. Yesterday, the day before yesterday, you can see market reach until the 50% of that daily last fair value gap, which I believe at the end of the time it will be broken. I believe that at the end of the time it will be broken. But so far it reached until the constant crossment of that daily last fair value gap. Then market fall. Came back again to this breaker block. Body closed above here. At the same time, this is that weekly order block here. Weekly order block. Okay, don't get confused because uh, it is not the weekly chart, but from the weekly chart, this is that weekly order block. It came back again, trade that weekly order block yesterday. Today market is going higher. I believe that this order block, this highest up close body close candle, it will be broken by this holiday. I believe that. Okay, it doesn't mean that it is going to happen, but I believe that it will be broken. I mean, the opening price will be broken and market will reach at least the 50% of that candle, body to body, at least until the 50% of that order block market will reach by today's holiday. That is my belief. I am not saying that it is going to happen because today's price action or today's trading is bullshit. Nobody should trade today. Nobody should trade today. You are good to trade if you are trading through your paper money. There is no restriction. But if you are trading evil or the real money, please don't do that. It's my request. Because today's holiday, there will be no volatility at all. From daily chart, I don't think so there is anything more important than this. I want to see today inside candle. That means this candle will stay inside this candle, and tomorrow market will break everything and it will go toward the buy side liquidity, toward that all-time high. Obviously, it is not reaching for that all-time high by tomorrow, but I will start to believe that tomorrow market will go higher. That is my so far. It's my belief. Let's go to 4 hour chart. If you remember, that is that 50% of that 4 hour week, very specific week. That week has taken all the liquidity, traded a fair value gap. If it doesn't do one of that, the weak 50% has no value. Now, if your expectation is bullish, you are thinking that market will go higher, then you will expect market will close above that 50%. If your bias is bearish, you will expect that market will never touch this constant crossment. So as you can see, market never touched that on. As my bias was bullish, so I wasn't looking for sell. But if my bias was bearish, I would see these confluences here that market didn't touch that 50% of that week, and I would be strongly bearish if my bias was bearish from the very higher time frame. If it was the bullish bias, then I would be sorry, bearish bias, then it would be a very confident for me to look for the sell from 4-hour chart, that is that week. So maybe my bias was wrong yesterday. I was bullish, market was bearish, so my bias was wrong. Though my bias was wrong, I took my buy and I showed you how beautifully we can do the buying thing. I will show that again today, but I hope that week 50% how to use that on, it is going to give you more it will give you more confidence to use the week 50% and make you more confident about your direction. That means if you are bearish, you will expect market will never touch that 50%. If you are bullish, you will expect market will close above that 50%. Okay, you will think like that way. Here I have a week here. See this week. This week is important. Can anyone tell me, is this week important? Because I have a week here that is also clean. Is that week important or not at all? Anybody can tell me that? Voice is breaking. Is it clear now? Or let me do one more thing. Okay. Is that clear now? Just let me know, Sharada. My voice is okay now? Clear now. Okay, thank you. So if this week is not important, are you going to give the priority to that week? I'm not going to give the priority to that week. But this week 50% extremely important for the bias, for the direction. It's important. Okay. Let's go to hourly chart. The 4-hour chart is done. I mean, there should not be anything important from 4-hour chart because rest of the thing I've already explained. So I don't need to think about this 4-hour chart anymore. Let's go to hourly chart, 1-hour chart. In 1-hour chart, if you look over here, this 1-hour chart. Now here, this one from 4-hour chart, I just didn't change the time frame, so it will be stay here. Okay. From 1-hour chart, as you can see here, I had this propulsion block previously. That propulsion block, I wanted to see this propulsion block will hold the price, send it higher. Market fall again, trade that order block one more time. Why? That is the order block. See this? Sorry, not that candle. This candle are the order block here. These two are the consecutive order block. Guys, very simple thing. Very simple thing. Market structure shift, fair value gap, price trade that fair value gap. Lowest down close body close candle is going to be your order block here. That lowest down. There is no other candle which has closed below that candle. So this is my order block. Now, when I will use the consecutive order block, that depends, and you please watch that order block video. You will understand that I'm not using it as an hindsight. That is my order block level. Highest level of the order block is here from opening to the high. That is the order block level, and the 50% here, if you just mark the high to the low, this is the 50% which is called the mean threshold. Nobody closed below this mean threshold. One fake breakout here. Fake breakout can happen once only, just once. Now again, if you think that, sorry, if you ask me, how do you know that fake breakout can happen once? Because I never heard about that. My observation, my expectation. I have seen like this way, fake breakout can happen one, not twice. I will use this way. If you ask me the reference where ICT talked about this, no sir, I won't be able to do that. Because ICT didn't talk about that, or maybe talked, I didn't see. Okay, I didn't listen. So I promise you, brother, I didn't listen anybody that fake breakout can happen so on or that type of things. Never ever. So if you get confused or if you ask me about this, I won't be able to give you the reference because some people, some guy actually asked me about the reference where ICT talked about that. Why you are giving us like misinformation about ICT concept? I'm not saying that this is ICT's explanation. This is my observation, my knowledge. So if you don't want to use it, you are welcome. If you want to use it, you are welcome. Whatever you want to do. One time market closed below this mean threshold, the very next candle, or maybe one more candle, sometimes one more candle closed above this mean threshold. Fake breakout. At the same time, it has traded this hourly last price look a lot of time. It is also acceptable. But this fake breakout, nobody ever closed below this mean threshold ever. Never ever. So still this mean threshold of that order block is valid. So fake breakout can only happen once. Market trade here, come back again to the order block, went higher, come back again here to this specific order block. If you see this propulsion block which has been violated, why that is the propulsion block? I mean, I just told that is the propulsion block, but if you clearly want to know which one is the perfect propulsion block, this is the perfect propulsion block. Here, this one is the perfect propulsion block when this candle closed above that propulsion block. That is the perfect propulsion block. I mean, if you need the perfection, then that is the perfect propulsion block. Market came here as this was below that order block level. I didn't mark it as my propulsion block. Instead, I used that one as my propulsion block. Market came back again, trade that order block from hourly chart, perfectly started to go higher. Where am I expecting market will go? Relatively equal highs. See this high and that high. They are the relatively equal highs. Expecting market will take that relatively equal highs, and finally that high will be taken. If body close out that high, I will be strongly bullish for that all-time high. Until then, I will just keep watching this market. Let's go to the 15-minute chart. This is the 15-minute chart. Market went here, made that relatively equal highs, trade that 50% of that daily fair value gap. Here, this is the daily fair value gap, 50%. From 15-minute chart, it has traded that order block, highest up close body close candle, which has traded the fair value gap here. If you find the fair value gap from hourly chart, when you will find, fair value gap from hourly chart, highest up close body close order block, trade that order block, fall again. Where did it came? A specific level, which is the breakaway gap. In other word, this is random. This is random. Higher time frame, daily chart has provided me the reaction, but from 15 minutes, this is a perfect random level. So I don't like the random reversal. I want to see they will be taken and market will trade at least any of the 15-minute level. Again, I would love to add one more thing. This highest up close body close candle, though it has traded this 15-minute last fair value gap here around this area, or the hourly fair value gap, if you go to hourly chart, though it has traded that gap which has provided or made this candle as a valid order block, I prefer any kind of reversal should happen from a fair value gap. I prefer that. That doesn't mean it need to be happen, but I prefer that. Okay, market reached until that area. My bias was bullish yesterday. I wanted to see this high and that high. That relatively equal highs will be taken. Market closed below this new week opening gap, which is going to change my bias. How to use the new day opening gap and new week opening gap? They are used for your direction. New week opening gap and new day opening gap is actually going to give you the direction. Whatever your direction is, market is going to give you that by using that new week opening gap, new day opening gap. Body closed below this new week opening gap, no more buy is valid until a certain level. Where is the next certain level? 15-minute last fair value gap here to that specific leg. This is that 15-minute last fair value gap. I will see can market reverse from there or not. If it fail and body close below this last fair value gap, where is the next last fair value gap? Below that last fair value gap from 15-minute chart. Here, this is the next last fair value gap from 15-minute chart. Below that last fair value gap, what is that last fair value? Yeah, below that last fair value gap, this is the next last fair value gap. So until that last fair value gap, I will be bearish. When market will be here in this last fair value gap, I will start to look for buy. Why? Because I would prefer some kind of reaction from that last fair value gap. I'm not sure yet market is reversing now or market is making some kind of bull move. How do I know that the bull move is going to start? If there is a 15-minute bullish fair value gap and market doesn't work the 15-minute bullish fair value gap. Please watch yesterday's live. Over there, I gave a lot of information. It will help you a lot, I promise you. It will help you a lot to understand this price action. Okay, When market is going higher, made that bullish fair value gap, now started to go higher. What is my first interest? This entry fair value gap, very specific gap. Okay, no other gap. This entry gap, this last gap. See this last gap from 15-minute chart here. That is the last gap from 15-minute chart. So my next interest is until this gap. If market can go through this gap, yesterday's live, please watch it. If market can go through this gap, next target is this new week opening gap low. At least market can't reverse without trading that new week opening gap low. It is nearly impossible to reverse without tapping to that new week opening gap. At least if there was no new week opening gap, I would be bullish until this last parabolic gap from 15-minute chart. That means without tapping to this last parabolic gap from 15-minute chart, it can't reverse. As I have this new week opening gap, which is 1000 times stronger than this last parabolic gap. So my intention is market will at least reach until the low of this new week opening gap. Then if I see it is respecting that new week opening gap low, I will start to think about the sell if I have some kind of relatively equal lows. As far as you can see, this low and that low, they are relatively equal lows, which is my sell side liquidity. So if I see like these two candle, if these two candle could tap to the low of that new week opening gap, any kind of selling opportunity, I would grab that until this sell side liquidity. Now look at this candle close, how this candle has been closed over there. Can you see the speed toward a level? So every time when market will reach in a opposite PD area, that means you are bullish, but market has reached in a bearish fair value gap or bearish new week opening gap. Why bearish new week opening gap? Because this is the low of the new week opening gap. When market is above and it came back again until the new week opening gap high, that is the bullish new week opening gap. The high is the bullish new week opening gap. The low is the bearish new week opening gap when market is going higher from the lower area. So until this area, if I see any kind of reaction over there, I will start to think about the sell side liquidity. If I have any sell side liquidity, I saw this clean run toward that new week opening gap. Then also I have seen market is refusing to trade this gap. That gap went through this new week opening gap. Market is refusing, even refusing. One time, two time market tried to reach for this new week opening gap, failed. It fall little bit, started to go higher. It fall little bit, went higher, closed there. This is how market is going. That means market want to leave that gap open. I don't want to trade this gap until a certain level. Where is the next certain level? Yeah, of course, this is a certain level. Let me mark this, which is called the lower quadrant here. That 50% or 25% of that new week opening gap. If you divide it by 4 parts, this is the lower quadrant, there is the upper quadrant. They are also important. So right now, 1, 2, 3, 4 candle was struggling to break that quadrant, lower quadrant. When body will close above that lower quadrant, the next logical level is this constant encroachment. Without look, this candle close above this lower quadrant, it should not fall before tapping over there to that constant encroachment. This is how you will use this new week opening gap. The best case is not to trade when market is inside this new week opening gap. As my English is not that much good and some of you can be confused, so I'm trying to speak slowly, okay, in a slow motion so that you can get everything I'm explaining over here. This is very important. This body closed above this constant encroachment. Market should not reverse. That means until here, there was a possibility that market will fall one more time, at least until the low of this new week opening gap or to this fair value gap. There was a possibility. I wasn't expected that because the way it tried after reaching through this new week opening gap low, there was a possibility that reaction will send to that fair value gap or to that new week opening gap low one more time. When this candle closed above this lower quadrant, this is the next level. At the same time, I'm not telling any of you to copy my trade. Today is not for trading. Please don't copy. Just focus whatever I'm saying. until reaching over here. If it fall, I will say that this is the bullshit market, and I'm not able to trade this market. Why is that? Because when market break that lower quadrant, the next level, until reaching to that next level, market should not fall, should not give me any kind of reaction. Now, there can be a reaction from there. See this? Something very specific, not something like random, very specific. What is that? 15-minute last parallel gap. It can give me a reaction, though I don't want to see that, but it can give me a reaction. For example, there is no last parallel gap from 15-minute chart, just no last parallel gap. What could be the next level? This constant crossband. If it failed before tapping to this constant crossband, this is the bullshit market. Don't touch it. You should not trade that market. As I have this last fair value gap, what should I do now? I will go to 1 minute chart. See this stop loss? I will put this stop loss the next logical level. Now, what is the next logical level? What do you think about the next logical level? See this down close, body close candle which has traded this order block here. If you would love to use this one as your order block, or if you would love to use this one as your order block, nothing is wrong. If you want to use this one as your order block, this is your propulsion block. So I will cover my stop loss that propulsion block. That means this reaction can send the price until that propulsion block one more time. It can send the price until that propulsion block. If it doesn't send it until this propulsion block, it will go through this and it will tap to this constant encroachment clearly. What I want to see right now, body close above that relatively equal highs, that high and that high, they are the relatively equal highs. If market can close above that relatively equal highs, or if even if it doesn't close above that relatively equal highs, if it go one tick above that relatively equal highs, my stop loss will go immediately to the break even. Why is that? Because they are the liquidity. Look over here, they are the liquidity. So what can happen? Market can take that liquidity, then it can reverse. It came here, take that liquidity, my stop loss should be to the break even. What is going to happen next? If the body close above that liquidity, that is a sign. What type of sign? Market is reaching for that constant encroachment. If look here, the body closed, I'm so confident now that market will go over there. So what I will do, I'll trail my stop loss more higher, above below that candle which has taken that liquidity. So it is a safe place. That means if it go below that candle, then it can simply go until that break even or maybe little lower. I don't want to take that risk. So what I will do, I'll trail my stop loss depending on that price action. Why is that? If there was a weak, not body close, my stop loss would be to the break even, just to the break even, because I want to see is it taking the liquidity, then it is reversing or not. But body close giving me the confidence that no, my target will be tapped or my target will be hitted. Okay, so actually I wanted to add this one over there, but that was not my intention to add. Just focus over here, that lower quadrant level and the that constant encroachment. I'm just going to put it over here. Okay, right now I'm just going to put it over here because this last parallel gap is inside the new week opening gap. I don't give the priority to this last parallel gap, so I will remove this parallel gap. You don't need to do that, but I don't like to use the last parallel gap if it is inside the new day opening gap or new week opening gap. I don't like to use them. Okay, that is my intention. I don't like to use them. That was that entry fair value gap. That is the last fair value gap. In between these two gap, there is no other gap. So I'm not using any random gap. This gap and that gap, they're the very specific gap. Now I'll be in 1 minute chart. As I told, it's gonna be a masterclass. So now I'm going to come to the point. Guys, are you getting bored? Let me know, because teaching is learning is always boring. I know that. So if you get bored, let me know that. We can talk a little bit, and then we can see. Gold analysis. I don't trade gold, Vivek. Yes, Mickey, I think so. What is that? Some really good moves happened today. But still, we should not trade, in my opinion. In my opinion, okay, to be honest, we should not trade. I mean, It's up to you. No problem. Your English is not that bad, bro. Hey, Mickey, thank you so much, brother. No, friend. Okay, thank you. Interesting, bro. Sharada, thank you. Very nice. Gupta, boring is effective. Thank you, Gupta. Not bored at all, friend. Keep going. We are listening. Thank you, Moon7. You're Robin Hood. I'm not Robin Hood. By the way, here I showed you the inversion fair value gap yesterday. Oh, I forgot one thing to add to that inversion fair value gap, and that is if you would love to use the inversion fair value gap, first you have to understand where market is going. What is your direction? If you don't understand your direction, inversion fair value gap is not going to help you. Always remember that. How to find the direction? I explained it yesterday clearly so many times. When I took that sell, I clearly told, I mean, I was in Discord actually. So I told that all of them were random. So until price tap to the high, exactly tick by tick, market can't reverse. It is nearly impossible to reverse because this is a random level. I'm not in random. I don't believe in random things. Again, this thing, whatever I'm saying about the random things, if you ask me about ICT, I don't know, sir. ICT maybe didn't talk about this, I don't know, but I never heard to talk anybody except me to talk about these random things. I'm so confident about that things, so much confident because it provided me a lot of winning trade. It came here. No buy is valid until the 15-minute bullish pair will get. Please watch yesterday's live. It's all educational. Yesterday's live, there was no rant, nothing. Everything was educational. Okay. I wanted to catch and run until the unfinished business. I talked about this unfinished business. Again, no reference, my experience. And it is giving me precision. So I will keep using them. Nobody talked about this. Nobody, I didn't take it from anybody. Don't ask me any reference. All is my knowledge, my experience. That was that unfinished fair value gap, unfinished order block. That was my target. I went to pray. So just got stopped out here. You can see by one tick. Just got stopped out here because I randomly put the stop loss and I went for the play. But if I put my stop loss to the break even little above the break even, I wouldn't get stopped out because it should reach until that area. I was so much confident. I took the partial here. First, I took the sell, took the partial, closed the trade, buy because my entry was a little higher because of the volatility and the 3-second delay chart for the trading view. I added one more exactly over there. That was my intention to take the entry, the next entry here, exactly over there. That was my entry point. So if you see, if that is my entry point and my stop loss is at the entry point, market never tap to the entry point. So here market never came to the entry point. It keep going higher. Took the partial here above that high. Partial always make you profitable. 26 handle, then got stopped out here. Market clearly reached until this area. Then I told that until market reached to this low. If you remember, I was in live when market came here and was reversing from there. See this small gap between entry fair value gap and that high. There is a very small gap, very small gap. I told that still it is random. Yeah, of course, it can reverse from there if you mark that entry fair value gap from the volume imbalance. It can reverse from there, but I want to use the week to week because that volume imbalance was not too much clean. So when I saw market reach until this area, I'm not I'm not happy to see that reversal. So when market is falling, I clearly told that no, market is going higher again, and it will tap at least to the low. When it will reach to the low, the next level is to the constant encroachment. Until trading that constant encroachment, no sell is valid for me. Even if I would love to go for a sell, I need a bearish fair value gap from 15-minute chart. If there is no bearish fair value gap from 15-minute chart, there is no setup at all. If you go for the sell, you are gambling. Please don't do that. 15-minute bullish fair value gap after a long fall, 15-minute bearish fair value gap after a long buy or after a big buy always give you the precision. If you don't follow that, I promise you, brother, you will blow your account. You will blow your account because you will think that now market is falling, you will take sell, you will get stopped out, you will take buy, you will get stopped out, you will keep doing that. So take the confirmation, and the confirmation is going to give you that 15-minute bullish fair value gap after a big fall, 15-minute bearish fair value gap after a big buy or big run. Okay? Always keep remember like that. When market was going higher, I was bullish because of that 15-minute bullish fair value gap. I talked about the inversion fair value gap over here. Now, why is the this is the master class inversion fair value gap? Okay, so let me actually write that inversion fair value gap. I know, guys, this is actually bullshit to talk about this because you don't see the thing like that way, but I actually see like that way because I love to understand the real reason, and as there is nobody helping me and I'm not watching any other people or ICT student except ICT himself, and ICT never give you the reply. He is not going to clear your doubt. Okay, so for example, you have a question why that is the inversion fair value gap. ICT is not going to give you the reply. So I have to find out why that is the inversion fair value gap. I find out a very easy way to understand this, to understand every single word. Inversion fair value gap. Now, your English is thousand times better than me. I know you perfectly understand the meaning of inversion, the meaning of fair, the meaning of value, the meaning of gap. Everything is important. Why is that? If you just cut that inversion from that fair value gap, just there is no inversion. Okay, so it is called fair value gap. Why ICT called them fair value gap? It could simply could call them gap, right? Just gap. Why he called them fair value gap? That means this is a gap. That gap has a value. Okay, it's not valueless. It has a value, which value is fair. It's not unfair. Like for example, there is two guy are fighting. One is like 140 kilo. One guy has 140 kilo. Okay, and he is like 30 years old, and the another guy is like 7 years old and he's like 30 kilo weight. Is that fair fight? What do you think, guys? I need this answer because I need to understand that you guys are getting my point. There's two guys, they're fighting. One guy has 140 kilo weight and he is like 30 years old, very young. Okay, very young, energetic. And the other guy is 7 years old, just seven. He has like 30 kilo weight. Is that fair? If that fight, is that fair? Obviously that is not fair, right? That fight is not fair. That is unfair, or like something like, I don't know how to call them. So the gap, every gap doesn't have the value. Even if some gap has some value, that is not fair. Okay? That means there can be some fight, but that fight can be unfair, not the fair. And finally, there can be some gap which is fair. Now, my fair spelling can be mistake. I mean, I don't know. The spelling can be mistake. Okay, fair spelling can be mistake, but you understand what I mean by that fair, right? So that gap, does that gap have any kind of value? Is that value fair? This is your question, and this is how I find out the last fair value gap and the entry fair value gap, by just analyzing these three words: fair value gap. That means all the gap doesn't have the value. Even if some gap has some value, like first fair value gap, so like first gap actually, that has some value, but it's not fair. Last gap and the entry gap is real fair value gap. You will find them by using ICT's premium and discount. What do I mean by that? If you mark this low and that high, this is that premium and discount, right? Upper here, this is the premium. Lower here, this is the discount. This gap is not fair value gap. This is a gap which has some value, but this value, it's not fair value. The real fair value gap is this one because it is situated in the premium area. To that specific leg, it is situated in the premium area. Now this gap has some value. Why is that? Because this is the entry gap. Last gap, entry gap. In between these two gap, there is no other gap. You can't show me this. That means it doesn't need to reach until this fair value gap. It can simply reverse from this value gap. Now, I'm not rebranding anything. I'm just talking like this way so that you guys can understand what I mean to say. It is too boring, but focus. If you focus, you will see a lot of things, brother. Just thinking like this way. This is a gap, which gap has some value, but it's not fair. Why it's not fair? Because it is in discount. See this gap? It is in discount. Still, it's a value gap. Why is it's value gap? Because this is the entry gap, entry fair value gap. Sorry, entry gap actually. So it has some value. So I will call it value gap, not fair value gap. Fair value gap situated here. See this gap? This is the fair value gap. Do you understand this part? Because if you understand the fair value gap, then I will come to inversion. Is that clear, guys? Okay. Good afternoon. Good afternoon, Jian. You're doing great. Thanks. You're most welcome. Don't put stop and problem solve. Don't full stop. That's cool, man. That's cool. Hey, Moon, thank you. Yeah, that's not fair fight. I know. Yeah, thank you for replying, man. The old man is already dead. Who you are talking about, by the way? Who is the Thank you, Madhi, by the way, for making that clear. So I hope that most of you got the point of fair value gap. So it is not something random. ICT just simply called them fair value gap. No, it's not like this way. I believe ICT is an extraordinary guy and he thinks a lot about this market. Like I try to think, and I believe that ICT is like that type of guy who think a lot, then he named it as a fair value gap. Otherwise, he wouldn't, say that. If you look at this run, this whole leg, see this gap over here? It is called fair value gap because this is situated in the premium area. Now, don't get confused by premium and the discount because I don't use them. And in my opinion, 99% people doesn't know how to use the premium and discount. They can only show you as a hindsight or as a recorded or something like that. The premium and discount. This is my belief because I don't know how to use the premium and discount. That's why I don't use them. I go for the trade anywhere. Yeah, I can take the entry when I'm in deep discount. I can take the buy when I'm in a deep premium by using that specific terms fair value gap. Now talk about the inversion gap. What is the inversion? When the fair value gap, first it has to be the fair value gap. When the fair value gap is going to be inversed, then I'm going to call that IFVZ. In short, IFVZ, inversion fair value gap. When I'm going to use the gap as an inversion gap and I'm gonna call it as a fair value gap. I don't need the last fair value gap or the entry fair value gap. All I need a gap that is respecting the market. What do I mean by that? For example, if you look at this gap, which is not situated in the premium area, okay, this gap, it is not situated in the premium area. This is my perfect inversion gap. Why is that? Because look at that candle. See this candle? Market is falling, falling, falling. Come back again, tap to this gap. Then fall. Take the liquidity and reach until a certain level. That means this gap has been used. That means price is respecting that gap. When market or the price is respecting a gap, ultimately that gap is going to be valuable for me, right? Because market is respecting that gap, so this gap is valuable for me. I'm gonna use that gap. It is situated where I don't care about that. All I care, market is respecting that gap. When market is bearish and market respect that gap, fall and took that liquidity, how do I know that market is respecting that gap? If it trade that gap 1 2 3 4 5 times and then went through this gap, is that gap was respecting? No, 100% not, because market was trying to break it but didn't respect. How do I know it is respecting? Market trade that gap maybe 1 time, 2 time, 3 time, 5 time, 10 time, 100 time, maybe 1 time, just 1 time, and then fall. Took the liquidity. What do I mean by liquidity? Relatively equal loss? No. If it takes relatively equal loss, that's good. If it takes single swing low, it's also enough. Just swing low. It has to be the swing low. Remember, if it take that swing low, it's enough for me to think that this gap is being used. That means market doesn't want to reach for that gap. Instead, it has bring that value from that area to this area and respect that one falling, taking the liquidity. The funny thing about the inversion fair value gap is you don't need to predict the inversion fair value gap. You are able to see the inversion fair value gap after effects. That means all of these things you are seeing now, right? You are not predicting that it is going to be the fair value gap. For example, when you got that market structure shift here, you got the market structure shift, entry fair value gap, last fair value gap. So what you are going to predict? Market will tap to this entry fair value gap, then it will go higher. You are thinking like that way, but here for the inversion fair value gap you don't need to predict that. You already know this is the inversion fair value gap. How? Because market has been respected that fall, and now my direction is bullish for until a certain level. I'm now bullish, so what I want to see, market will close above this gap. If it can close above that gap, this is gonna be my perfect inversion gap. This is going to be my inversion fair value gap or inversion gap, whatever you say. This is going to be my inversion gap. Anybody has any confusion about this, that everything was in live? This area was, I wasn't live, I came live around this area, I guess I saw so far, but everything was in live in my Discord. I was putting them in my Discord step by step how to use them. Anybody has any confusion about that inversion fair value gap? This is all my knowledge, my observation. I'm not saying any of you to take it. If you are don't want to like it, just throw this to the dustbin. But if you feel like okay, there is a logic, I will give you more examples which was not hindsight. I clearly talking about them. So do you understand the logic, right? Boom, boom. No, it doesn't need to take the extreme liquidity, but it has to reach. I mean, inversion fair value gap you will be able to use if and only if your direction is fixed. That means when market fall until a certain level, even if there was some kind of extreme liquidity. For example, here was the extreme liquidity. I don't care about that. After reaching over here, if I my direction is now changed and I'm thinking that market is now going to reverse, I'm going to use this inversion fair value gap. I don't care about the extreme liquidity. All I care about some kind of little liquidity. If a little liquidity has been taken, I'm gonna use that as my inversion fair value gap. Simple logic, just simple logic. If you don't, I mean, if you have any confusion, just let me know that, okay? Because it is important. To be honest, it is very important. I want to show you one more gap over here. This specific candle tapped to this gap, went higher, take the high. Now here it has taken that high. Why I'm showing it to you? I mean, you will understand that when I will ask you the question. Okay, it tapped to this gap, went higher, take that high. Did it take the liquidity here? Did it take that liquidity? That is my question. Okay, so please try to give me the reply, because if you give me the reply I will understand that you got my point 100%. If you don't reply me, then it's gonna be difficult that you got my point or not. Is that the liquidity taken or not? I'm talking about here. This is a fair value gap. Market tap to this fair value gap, went higher. My bias was bearish, right? Remember, until this high. So my bias is bearish. I'm only interested to look for sell. I'm not interested to look for buy. So now, can I use this one as my inversion gap? Because when I will give you this reply or this solution, lot of things will be clear to all of you. I promise. No, it's sweep only. No, it doesn't mean sweep or body close. All I mean that is, did it take the swing high? Did it, when it tapped to this fair value gap, did it take the swing high or anything? Just look over here, okay? Just this price action, nothing else here. This is that price action. Just you will see this price action here. Just small this price action. Tap to this gap, went higher. Did it take any swing high? My question is, did it take any swing high or any liquidity? Okay, any swing high is gonna be the liquidity, same thing. Okay. Yeah, that's why I was actually asking the question. Okay. I would love to ask Sharoda why. Why no? Why did you say no? No, there is no need to MSS. I'm not talking about MSS. I'm just telling, isn't it so clear, brother? It tapped to this gap. Did it take any swing high or not? Here, did it take any swing high or not? That is my question. Not market structure shift, not I mean body close or sweep or nothing. Sweeping liquidity is also liquidity taken, which is called the obvious liquidity. That means market is going to take that on later. So here, Sharada, why do you think that it didn't take the swing high? Because my question is simple. So it's not taken swing high. Okay, so in your opinion, that is not swing high. Am I right? Sharada, in your opinion, that is not swing high. Am I right? I just got one guy. Yeah. Thank you, Sharada. You only got that point. Why do you guys think that that is a swing high? Can't you clearly see that they're the sideways candle? They're the clear sideways candle. Why do you think that is the swing high? There is no swing high. I don't see not even a single swing high. I have seen that finally market has made a swing high here. So that is actually the swing high is here. They are the sideways candle. Wick just little higher, little lower, little higher, little lower. They are not the swing. Can't you see the swing here? They are the sideways candle. And finally market has made the swing here. See this swing? This is a swing and that is the high. So until that high, there was not even a single swing high which has been taken over here. No, here, this is a swing. Can you see the swing? Like some kind of swing here around this area. Very nice swing. Now, this high has taken that relatively equal highs. See this high and that high, they're the relatively equal highs. This high has taken that relatively equal highs. That's why this can be used as an inversion gap. But for example, there was not any kind of swing high at all. No swing high at all over there, okay? Or relatively equal highs at all. I couldn't be able to use that as my inversion gap. Why is that? Because this high didn't take any swing high. They are not the swing high. Is that clear? Is that clear, sir? Because a lot of you guys are confused about swing high and sideways candle high. Sideways candle high will pull you into the losing trade. So please try to differentiate the swing high and the sideways candle high. They're the sideways candle. One, two, three, four. These four candle are sideways. Look at the open and close. They are around the same area. Then this candle open, closed there, open, closed there, open, closed here, open, closed here. Made a swing. See, a swing. And in that swing, that is the high. Here, this is a swing high. Over there, this is a swing high. See, a swing high, swing low, swing high, swing high, swing low. Look this. They are the sideways candle. One, two, three, four. They are the sideways candle. But fortunately, all of this area has made a swing high. Like here, all of this area has made one swing high. But if you use them where this candle is a high and maybe this candle went little higher, it doesn't take the swing high because all of this area is going to make a swing high, one swing high. What happened here? All of this area had made a swing high, not uh, swing high here, swing high here, swing high here. No, there is no three swing high. There's just one swing high. What was your doubt, Gupta? Can you please tell me one more time? I maybe miss your comment. As the market is closed today, so I'm just talking all of this bullshit, okay? The valid inversion parabolic can be used around the point of interest where you are expecting the market to reverse or anywhere from the middle to from the previous leg as well. If there is no higher time frame, there is no entry. This is forbidden except Tuesday and Wednesday and Thursday. For example, if I want to take a sell here, I need a higher time frame period there. If it is a normal day, like not to Wednesday and Thursday. If it is not Wednesday and Thursday, this is a perfect inversion gap. I'm going to take a sell. This high didn't trade any higher time frame period. That means hourly or 15-minute, any kind of area or PDRA. No, this sell is not valid. I don't care how beautiful the setup is. It's not valid if it doesn't trade any kind of higher time frame period. Okay. Okay, Gupta. Oh, okay, Sharuda. That's cool, man. Yeah, guys, you are helping each other in the Discord. I saw that. I'm really happy because a lot of pressure has gone from me. I can see that you guys are helping each other and you guys are growing. You guys are getting better day by day. I'm really happy to see that. And thank you so much. Keep doing that. Whatever you know, try to share with me. And whatever I know, I will try to share that with you. And this is how we are going to grow. Also, don't look into higher time frame inversion. No, I don't look at the higher time frame inversion gap much because as I showed you at the beginning that hourly order block, I'm a human being. I'm not a robot, so I can't keep the things in my mind and I have only one monitor. Maybe I had seven monitor, I would be able to use everything from the higher time frame, everything. But as I'm using just one monitor, I can't just focus everything. Okay, just because of that, because I have just one monitor. So I need the 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 setup to understand everything so that I will be able to increase my the accuracy much bigger. All I need a setup. Now most of us doesn't have the ability to make that setup like seven monitor, a very good nice room, trading room, something like that. Most of us doesn't have that ability. So what we have just one ability to uh, use one monitor, and obviously you need a monitor. Tab or mobile is not appropriate for trading and you won't be able to do trading through them. So I would love to keep doing this until I get some people who are going to get like 200k. So until that area I will stay over here in buy setup. Now Miki, I'm not watching the right now market and I'm not interested to trade today. As I told, if any of you are interested, you can trade today. Let me just check what happened to my buy where I took it. Did it hit my target or not? Okay, I got stopped out here, I guess. Yeah, I got stopped out here and then it hit that target. My target was over there, but it's okay. I got stopped out here. That was overzealous run. I got it stopped me out, then went higher. I am not interested to hold my trade until the propulsion block or the break even because I could get stopped out. I mean, this market could go a little lower as I explained over here, but finally it reached over there. You don't need to trail the stop loss too fast like me. I love to trade the stop loss like that, and obviously there is no buy for me. For me, okay, because today is the USD holiday, brother. Today is holiday. Holiday has no trade. MS. Everybody has to grow as you are helping the poor. I'm also poor, brother. Tahir Mustafa, no, what happened? There is no swing high. Yes, sir, there is no swing high. So I guess until now everything is clear. Then this was the inversion parabolic gap which I took my entry. The where I took my entry from this inversion gap. First, I pushed my button when it tapped to this inversion gap for the first time because of the volatility and the 3-second delay of trading view. My entry got over there around this area. So what I did, I put a limit order to the 50% of that inversion gap. As you can see here, clearly you will be able to see that. Okay, exactly to the 50% of that inversion gap, because my belief is even if market would love to go higher, it will come back again until the 50% of that inversion gap. It took me, then went higher. So that was the first entry from the inversion gap. Then I was in live over here. Remember how the inversion word is coming here, how the inversion gap word is adding with fair value gap. If you miss anything, you are going to miss everything. Now, what is the next level where market should reach? Before reaching over there, where market should not come back. I mean, where without tapping over there. This is that entry gap from 15-minute chart, my higher time frame PDR. Okay. So I'm not interested to take any kind of sell until it reach to the low. Even after reaching to the low, depending on the price action, I will keep looking for buy until there is a 15-minute bearish fair gap. Now let's look over here. I was in live. I was showing you. Remember, market took the liquidity, market structure shift, fair value gap. It went higher, little consolidation, tap to the target here. That was my first target. Second target was the constant encroachment of that hourly, sorry, 15-minute entry fair value gap. If you remember that, I was in live. Now let's talk about something here. Market went higher, consolidation went higher, boom, market fall. What did I talk about? The trend is your friend. If trend is your friend and the trend is confirmed, when there is a 15-minute bullish fair value gap, market trade here, there was a 15-minute bullish fair value gap which was untouched. What is your trend now? All the day your trend was bearish. So I was looking for sell only. This is the first time where market has provided me the selling opportunity yesterday. This is the first time. You can say, brother, this is a deep discount. Why you are thinking about the sell over there? Because as I told, I don't see the premium and discount. I work only with the fair value gap. This was the first opportunity for me to take the sell. Until here, I explained everything over there. Everything. There was not even a single opportunity to take sell. This is the first time market has provided me the manipulation. That means market has taken some buy side liquidity, provided me the entry opportunity over here. One entry opportunity, two entry opportunity, market reach here. Bullish fair value gap, market started to go higher. Second trend is confirmed. What it is going to do now? Bullish trend. So when it is bullish, what I will look for? Only buy. No sell is valid. Only buy. Every time market will take some liquidity. For example, here it took some liquidity. Market structure shift, fair value gap. That is the first opportunity to take the buy. If this candle tap to this gap, you should be in the market until the certain level. Where is the certain level? This low, entry fair value gap low. Until that low, you should keep looking for buy. Okay, market didn't give you the entry opportunity. As you can see, this candle didn't reach to this gap. Just think, if it could tap to this gap, you are already in the market, you are already profitable. Unfortunately, it didn't provide you the entry opportunity. So what I have done here, the same thing I will do here. Market went lower, take that low, not a swing low, perfect swing low or something, but took that low. It's too, I mean, dangerous to take that entry, but is still the stop loss was too small, very small. As you can see, even if you take that buy from that fair value gap and you put a stop loss just below that candle, or even if you put your stop loss below that low, just taken that low, still 8 handle. In the New York session, 8 handle is nothing, so you can take that risk, 8 handle risk for 22 handle. There's nothing wrong. By the way, I wouldn't go for that buy, though I outlined that one. Market came here, trade there, went here, boom, market structure shift, fair value gap. Are you going to take the sell? Look, just you don't know anything over here, okay? So you are seeing that market reach until this entry gap. This is the first time market reach here, took the buy side liquidity, reached until a certain level. Then it has provided you a very nice market structure shift here. See, this low has been shifted by that low. What a nice run. There is no buy side liquidity left over there. Nothing. Relatively equal highs, nothing is left over there. There is a fair value gap, entry gap, or anything, whatever you say. Market tap to this gap, it is falling. Are you willing to take that sell? 100% no. Why you will take that sell? You should keep looking for buy, because trend is your friend. Now look at the entry opportunity. Where is your entry opportunity? I outlined this and I tweeted it to my Twitter. Market fall here. I am seeing that market has taken the liquidity. See, all of this liquidity has been taken by that low. This low has taken all of this liquidity, but market has made the liquidity here. This low and that low. they are the relatively equal lows. I don't care. I'm only interested to look for buy. If market provide me any buying opportunity, I'll go for that buy. When market provided me this, went higher, I'm interested to look for buy only. No sell is valid for me. There was a fair value gap here. If you would love to take the buy from there, it's okay. If you don't want to take the buy, what did I talk about? The inversion gap. Very specific thing. Now you are looking for a buying opportunity. Remember, now you are looking for a buying opportunity. When you got this market structure shift, this high has been shifted over here, which is market structure shift. Price trade this gap, fair value gap, but as the market structure shift and the fair value gap has been traded by single candle, maybe you will fail to take that entry from this gap because the next candle didn't reach to this gap ever. It didn't reach to this gap. Then market come back again to finish the unfinished business. What was the unfinished business? This gap didn't been traded. Look over here. This candle trade that gap, but remember this candle has provided you the market structure shift. Without the market structure shift, you are not able to take that buy, right? So this candle has given you the market structure shift over there. Now you are waiting to take entry by this candle, but that candle didn't tap to this gap. See, this gap didn't tap to this gap. Instead market went higher. Then market came back again. Why did it came back? Exactly to trade this unfinished business. Finish the business, went higher, trade the certain level. What is the certain level? Constant encroachment. Until trading this constant encroachment, no sell is valid. No sell is valid. What happened here to this gap? When market went higher, fall little bit, trade that fair value gap, fall again, took that liquidity. See, all of this liquidity has been taken over here. What is my bias? Bullish. Why? Because trend is my friend. Every time market will take the liquidity, I'll start to look for buy until market reach to this constant encroachment. Until here, I will keep looking for buy. No sell is valid if and only if there is a bearish pair lookup from 15-minute chart. Then I will start to look for sell. Market took that liquidity, closed above that gap. This is a very simple specific gap. That gap has been traded here, then took the liquidity. My direction is bull. I am willing to take a buy from that area. A stop loss is gonna be below that inversion gap, just below that inversion gap, because you should believe that market is not going to close below the constant encroachment. You should believe like that way. Now one handles, two handles, just no one. I won't be able to do that. So what I will do, I'll put my stop loss below that low, at least below that low. So if market would really love to violate that inversion gap, it can reach until the top of this gap. Still, this is just 7 handle. If you want to put it below this gap, still that is 10 handle. It's okay. Where is your liquidity? This high, that high, relatively equal highs. At least you should take the partial there. You can hold your trade until the constant encroachment. Partial should be taken over there. So until this partial area, 14 handle, very small trade. Stop loss here below that candle, which has taken that which is actually made that inversion fair value gap valid. This candle has made that inversion gap valid. Even if you would love to put it over here, which is in my opinion best area to put, target is this relatively equal highs, at least the partial, put the stop loss to the break even. Rather just 14 handle. This time market has low volatility, so 14 handle. When the market will be high volatility, you will get 38 handle, 34 handle. What will happen then if you understand this logic? Because logic is going to work in a very certain way. When market trade that inversion gap, took that liquidity, this inversion fair value gap has done its job. It's not in unfinished business anymore. I have one more unfinished business here. Did market reach until this constant encroachment? No. It started to fall. Where it will fall? Where it is coming? Last fair value gap. Went higher. Lowest down close body close candle. Order block. Tap to this order block. Boom. This time I will use the order block. Why is that? Because market fall here. This is the first time when market has made the order block. This is the first time when market has provided me the order block. My bias is still bullish until a 15-minute bearish fair value gap. I will take re-entry from that order block until that high. I will take a partial above not above that high, actually to the rejection block. I will take the partial hold my trade until this constant encroachment. If I am using one contract only, I'll trail my stop loss too fast. When market will start to go higher, I'll trail my stop loss too fast until the constant encroachment. That will be my target. I clearly told yesterday, without tapping to this constant encroachment, if market fall, I'm not interested to see that. This low and constant encroachment should be taken. Why this constant encroachment is important, brother? Nobody asked me this question because you don't have that question. When market came here, trade to the top of this last fair lookup from 15-minute chart, you didn't talk about the constant encroachment. But now, why this constant encroachment is important to you? Why this constant encroachment is important to you? Anybody has this doubt in your mind? Premium and discount bullshit, bro. Hey, sure, sure. Not bullshit, brother. It's the most important thing. I just don't know how to use that premium and discount, by the way. Sachin, brother, what happened, brother? Guys, anybody has that doubt in your mind? Why I'm talking about this constant encroachment? Now you are seeing that market reach over there, so you are now talking about this boom, 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 something like that. No, I talked that even before when one guy told me why when market was there here. He asked me yesterday's live, please go and check. He told me, are you still bullish? I told him until that low and the constant encroachment, yes sir, I'm bullish. I'm not interested to look for sell. Why that constant encroachment is important. And I also clearly told that when market will go through this, my next target is this low. Even before reaching to this low, market if fall, I will not. I will say this is the bullshit market and this market should not be touched. Now my question is when market fall here, I didn't talk about this constant encroachment. I just used the high, just the high. But now, why you are using the constant encroachment? I try, I try, Kingston, I try, brother. And I use my own experience and knowledge to make it much more precise. I'm very near closing my stream, so it was a very small stream. I just need uh some answer from you guys. So please don't make me more delayed. Whatever I'm just asking, just let me try to try to reply me, okay? When market fall, I didn't talk about that constant encroachment of that last fair look at from 15-minute chart, but when market is coming here, when market is coming here and it tapped to the low, why I keep looking for buy until this constant encroachment? Why this constant encroachment is important? Anybody has this question in your mind? If you had this question in your mind, just tell me, yes, brother, I had that question, or just say yes. If you didn't have that confusion or that question in your mind, even after saying, when I'm showing you, okay, I'm just showing you that why the constant encroachment when market is falling was not important, but when market is going higher, why the constant encroachment is important. If this doubt come to your mind, arise to your mind, just let me know. Because if you don't focus over here, I don't see any other way without asking you the question. If I don't keep asking you the question, you guys just let it go. You don't focus over there, because you should ask me this question. When market is falling, why didn't you give a shit to that 15-minute bullish fair value gap constant encroachment? But when market is going higher, why you are giving priority to that constant encroachment of that bearish 15-minute bearish fair value gap? Why that constant encroachment is it? Why that is too much important? Why it is important? And as you can see, after trading that constant encroachment, then finally market fall little bit. Still I'm not bullish, I mean bearish, still I'm bullish, but still there was little fall. And with a setup, okay, I mean not like a random fall, setup with a setup fall. Just two guy, you had just I had just two guy who has this question. Most of the guy didn't have this question. Okay, Christo Kingston and Gfax, give me the message to the Discord. I'll tell you this in Discord, because most of the people are not interested about this, so I'm not going to talk about that. So guys, thank you so much. Just don't forget to give me a message to my Discord. I'll tell you this in over there, okay? So here, this inversion gap, I hope that it's clear to you how to use this gap. And this was the unfinished gap, so everything is fine. Then finally market fall. provided me the market structure shift. See this market structure shift after reaching a certain level. Consequent crossment, market structure shift, fair value gap. Market reach to this gap. This one is the last gap. Entry gap is here. Either way, it is the immediate reaction. Reach to the entry gap as well as the last gap. Boom, market fall. Where did it came? Remember, it left that sell side liquidity here. Now is time to take that sell side liquidity. Now it is the time to take that sell side liquidity. Until now, there was no importance to take that sell side liquidity. Why? Because market didn't reach in this certain level. This is a very important and extreme level that should be traded. Market traded there, then market fall. Clearly, a very nice fall over here, around until this area. When market is falling, did you notice anything? The same reason to take that buy. I took that buy because I had some unfinished business over there. Fair value gap, order block, some unfinished business. So I was bullish until this area. Then market went through this because market changed the bias. So we are started to look for buy. But that was the unfinished business that provided me that buying opportunity. Now, at the beginning of this stream, what did I say? Market fall, took the liquidity. See, market structure shift, fair value gap. What is this fair value gap? Anti fair value gap. What is this gap? Last fair value gap. What is this candle? Order block. What is this? Propulsion block. Why is this order block? Trade that fair value gap. Don't you don't need to think about this order block and propulsion block. Just think last fair value gap, entry fair value gap. Did market provided you any entry opportunity over there? Wasn't it so much beautiful setup? Yes, sir. It was a very nice, good setup, but market didn't provide me the entry opportunity. Okay. Now extend it to your right. Why market reach until this area, brother? Because your real gap is started from there. From there. Why from there? This candle closed there. This candle opened here. See, there is a gap, which is a volume imbalance. It is called the volume imbalance. Where the market came, exactly where the market came, brother. No, I don't want to use that volume balance as my gap. I would love to put it until this area. So you can see little weak outside of this area. But I showed you the real gap, the last gap from there to there. This is the real gap, the last gap. Market took that relatively equal loss, went little higher, boom, fall. When it fall, market structure shift, fair value gap, whatever is happening here, I don't care. Why is that? Because it is after 345. So after 345, one candle after 345, I'm not interested to trade anymore. I'm done for trading for today. I'm done. Okay. I just don't want to trade anymore. Still, market came back again, trade that order block, went higher, made that relatively equal highs again, open here, boom, took that all liquidity, then consolidation keep going higher, went through this entry fair value gap, went through that entry fair value gap, retest that entry fair value gap, reach until this area. What did I say? Market can't reverse, market can't come back here. Remember the 15-minute bullish fair value gap that market left? Let me show you. See this 15-minute bullish fair value gap market left. What did I say? It can't fall before tapping over here to this constant encroachment. Before tapping over there, it can't fall. It's nearly impossible to fall before tapping to this constant encroachment. Was that hindsight? No, sir. 100% perfectly. But little candle went higher, brother. Why it went higher? Brother, please go to your 1 minute chart. Look on your left. You will get lot of things over there. Sorry. Either way, I don't need this one. Just mark this one. Divide that into four area and keep observing them. That four area, keep observing them. You will get a lot of precision from this one, two, three, four, five. This five level will provide you a lot of things. Lot of things. From 15-minute chart, one candle just close one little above of this consonant crossment, which is called fake breakout, which I don't like to see. Sometimes shit happens. Make a volume balance over here, fall until something that should be traded unfinished. Why it left open over there? Because it was extremely bullish until a certain level. When it trade that certain level, come back again. Where? Here, then here. I don't want to see it is going to break that candle. Then it will keep going higher again. That is my intention. I don't want to predict what is going to happen over here because it is uh, the what's I mean the holiday. So this is how you can use this chart a little bit easier way, and I believe that this is very simple logic. Now you will be right every time. No, sir, you are not going to be right every time. Sometimes you will get confused. Sometimes you will get stopped out. Sometimes you will get profit. But if you understand that logic in a certain day, lot of profit you will be able to make. It's making reading this chart is kind of very easy thing, okay, but the problem is our human brain. We can't focus on the chart like 8 hours, 10 hours, 14 hours. We can't focus. So what you will do, you will just spend your time in front of your chart only the session time. For example, 3 p.m 2 a.m. New York local time to 5 a.m. New York local time for London session, 9:30 to 11:30 for a New York AM session, and 1 to 3:30, maybe 3:40, that New York PM session. In the meantime, you will take break. You will take break. That will help you to understand what is happening in this market. Anybody has any confusion? If you don't have any confusion, I'm actually done. I wanted to came to talk about this inversion gap, which is in my opinion, a very easy thing to mark. You guys, if you are with us in our Discord, you guys can ask Gupta. He is better than me. Okay, I don't know Gupta is still here or not, but he is better than me. I don't use optimal trade entry. That is bullshit in my opinion. I don't use premium discount. I don't use 4 hour chart as my hard time frame for entering into 1 minute chart. But if I would love to take an entry in 5 minute chart, yeah, 4 hour chart is the best chart for analyzing or for using as a higher time frame. But as my execution is 1 minute chart, 4 hour chart is useless for me. Again, for me, 4 hour chart is useless. So you will see that in social media or YouTube, almost every person, okay, keep using 4 hour chart, premium discount, optimal trade entry. What else? I mean, what else? What else they use? Turtle soup. Uh, I don't know how to use them, so I don't use them. In my opinion, I don't know, so that's bullshit to me. Because I don't know. Again, no, no hate or nothing. I just don't know how to use them, so it's bullshit to me because I'm a failure over there. If you are successful by using premium discount, optimal trade entry, brother, keep doing that because that is going to make you profitable. In today's morning session, I was watching this market whole area from 9 exactly from there to until this area. Okay, so that was my first opportunity to take the buy until this constant crossment. Until here, I didn't see any buying opportunity, so I went for that buy. I trailed my stop loss little far, so I got stopped out here, and the market hit my target. Shit happens sometimes, but still that was my only opportunity. Now you don't need to trail the stop loss the way I trailed, because if I get stopped out here, I know how to take the rebuy around this area until tapping to this constant endorsement, because I'm not bearish until this area. Why I'm not bearish? I have already explained that as well. Why I'm not bearish until this area again. Okay?
What do you think of new day opening up from last night? Price only tap into almost 0.25%. Can you explain a bit?
New week opening gap, new day opening gap, I only use for my direction again, guys. Right now, market is inside the new week opening gap. So I will keep waiting to see 15-minute candle close either above the new week opening gap or below the new week opening gap. If it close below the new week opening gap, I'll still keep looking for sell. If it close above the new week opening gap, I'll start to look for buy. For buying, I need the buy side liquidity. For selling, I need the sell side liquidity. If market close from 15-minute chart below that new week opening gap or the new day opening gap, but there is no sell side liquidity, I will do nothing. There has to be some sell side liquidity below the new week opening gap. There has to be some buy side liquidity above the new week opening gap. That only help me new day opening gap, new week opening gap to find out my bias. So I don't use them as my liquidity. I don't use them any other way except my direction. So if I am bullish, I will wait until 15-minute candle close above the new week opening gap or new day opening gap. If I am bearish, I will wait the price close below the new week opening gap or new day opening gap. Is that clear, brother? Abhishek, I guess you got my point, brother. Optimal trade entry. I really don't know how to use that. Okay. Thank you, Glenn Blaine. I don't see your name that much, brother. Why? You hate me now? Been observing that inversion fair value gap for a while now. Thanks. Thanks. No worries, Gupta, you are still here. Okay, guys. So in Discord, this guy, Gupta, Shubhangshu Gupta, is really good. Okay. Sometimes I even don't see the inversion gap, but this guy just show me, brother, there was the inversion gap entry. When I was saying that there was no entry, simply no entry, this guy just told, brother, there was an inversion gap entry. And I saw that, yeah, that was a perfect inversion gap. So sometimes I miss the inversion gap as I don't use that inversion gap so much. Yesterday, my intention was to talk about the inversion gap. That's why I took that entry from the inversion gap. Otherwise, I really don't use the inversion gap that much. But yeah, that guy, you guys can keep talking about the inversion gap. I hope that you'll get benefited. Okay. EDA. Oh, Vishak, what is EDA? I don't know EDA. What's that? EDA. Thanks, everything was clear as well as. Hey Madi, thank you so much. By the way, guys, you guys are so humble and you keep saying that everything's clear, though I know I made it so complicated sometimes, but still, your generosity actually make me surprised sometimes. Brothers, today is the holiday, so today's new day opening gap is important. 100% new day opening is important, but that new day opening gap is not going to give anything because I am not going to use that one. It is less than 10 handles, so I'm not going to use it, but it's important. You're too smart for me. I need simple strategy, not every detail of the algorithm, but I appreciate you and your. Okay, okay. Thank you, Glenn. Thank you so much, man. Hey, Sresh, how are you, brother? I'm just um, going to close the session actually. So I hope that nobody has no more question. I wanted to make it much more smaller or shorter. I tried my level best. No rant, nothing. Just keep focusing on the price action. At the end of the stream, I'm doing little rant. Otherwise, you guys are my witness that I didn't do any rant, and I was looking exactly for the price action. That's all. And before leaving the stream, make sure that you have pushed the like button, you have subscribed to our channel if you are new. Okay. So remember, see this tap to this new opening gap, a good area to look for a buy again. If there is any, uh, sorry, relatively equal highs, that is going to be my target. If there is no relatively equal highs, I'll target the last parabolic gap or the entry parabolic gap. If it provide me the entry opportunity, for example, any kind of breaker block entry, which is my first priority over here around this area, breaker block entry. If no breaker block entry, then inversion gap entry or 22 YT model, any kind of entry. The best thing is not to trade in this range. If you don't trade in this range, you will save a lot of mental capital. If you don't trade when market is inside this range, this high to this low. So that is the best thing, not to trade in the inside this range. So let the price decide first where it wants to go, because every single tick inside the new week opening gap and the new day opening gap is extremely important. They can be reacted they can be reversal point, they can be anything in every point. Okay, not like upper quadrant, lower quadrant, 50% high and low, not like, not only that, but also every single level is important because it is divided by thousand million part, million part. Every single tick is important. 2896.25 is important. 2896.50 is important. 0.75 is important. 2897 is important. Every level has the same importance when market is inside this range. And it's not only valid for new week opening gap, it is also valid for new week opening gap, new day opening gap, and the last fair value gap from 15-minute or hourly chart. Okay.
Do you think trader copier from? Do you know any trade copier?
Say Sharma, every kind of technical issues you have to ask to the Discord. There are a lot of experts, so they will be able to help you. I'm a noob. I only know little about this chart, this market. Except this market, I have no idea about this world. Nothing, no idea. I'm a noob everywhere. Okay, so no hate, nothing. I am a just noob. I'm a immature guy. So I have no idea what is happening in this world or everything. All I care how the candle is printing on that chart, when and how it should print it over there. That's all I try to understand. Except this, I don't have any idea. So I hope that if you just give a message to Discord, they will be able to help you. Okay? Thank you guys for being here. And again, before leaving, don't forget to push the like button and don't forget to subscribe to our channel if you are new. Until the next time, cheers guys.